Welcome to this special edition of Earnings Express, and we are here to be discussing State Bank of India, or SBI, the country's largest public sector bank that has announced its Q1 numbers just a short while back, and we'll be breaking down those numbers for you on this edition of Earnings Express. Let me just give you a snapshot of what we have so far. Well, the profits have zoomed almost 178% on a YOY basis. Net interest income for the quarter ending 2023 June has come in about 24.5% higher at 38,904 crore rupees. This versus the 31,195 crore that it reported last year in the same quarter. Now, if you look at the NPAs, well, that one you can say has fairly pretty much become in line, one could say. In fact, if you look at the NPAs, the gross NPAs have seen a marginal dip, one would say, just about 1.1%, at 0.71% versus the 0.68% it saw last quarter, whereas the net NPAs, that one too also seeing just a marginal change. So one could say asset quality pretty much in line, or rather improving on a sequential basis. If you look at the net interest margins, that one for the lender has grown by about 24 basis points, coming in at 3.47% versus the 3.23 that it saw last year. So let's break down these numbers, see how it will all add up for State Bank of India. In fact, if you look at the stock, though, the street not really taking these numbers too well, we could say, at least at this initial phase, it's down about 2% down, one could say, at this point. But let's look at these numbers individually and break those down. To do the number crunching now, joining me is Akshay Tiwari, the fundamental analyst at Religare Broking. Thank you so much, Akshay, for speaking with us, giving us your time. Let's get straight to it and understand what we are seeing from these numbers. Well, pretty much all in line, we could say. That profit number really giving us quite something to cheer about. But if you look at the other ones, if you say NII, that one compared to the analysts, what they were penciling in, that was somewhere around 40,000, but it's coming in at 38. So how would you be reading these numbers?
Yeah, hi, good morning, sir. Good afternoon, Stacey, and thank you for inviting me. So first of all, let's break out the numbers. So the advances growth of around 15% growth is pretty much in line with what the analysts were expecting. And also the deposit growth of around 12%, which is also what they were expecting. Talking about net interest income growth, so the growth was pretty much as expected, that it will be a decline of around 4%. So it is majorly because there is a decline in the net interest margin. It has come at around 3.5%, which was at around 3.8% in the fourth quarter. Now, the decline has happened because the cost of borrowings has gone up. And that is because there was a repricing in the deposit rates during the period of April to June. So during that period, what happened was the yield on advances were quite stable, but there was an increase in the cost of borrowings. Because there was a lag in the rate increase. So before that quarter, what happened was the yields on advances were increasing, but there was not much increase in the cost of borrowings. But especially during this quarter, April to June, we saw that the cost of borrowings went up, and due to which the NIMs got reduced, and which is why we are seeing that the NII got reduced. But I believe this was quite expected by the street, and we have seen this trend in different banks as well. Also talking about provisions, so provisions has also reduced. Now, there was an expectation that provisions will shoot up, and we have seen this in other banks as well. Even in private banks like Kotak and Axis, we have seen that the provision has gone up. But here the provisions has declined, and this seems quite positive to us.
Let me in fact just put out that provision number for our viewers. On a sequential basis, that numbers come in at 2,501 crore versus the 4,392 crore that it recorded on a YOY basis, whereas on a sequential basis, that number is versus 3,316. So provisions there, quite a good sign where you're seeing the provision number come down. But let's break that further down and see, when you're looking at the asset quality as a whole, especially for public sector banks, and given the fact that we have so many IBC cases where State Bank is that number one issue, or the number one lender when it comes to these big corporates as well. How much of this is changing in that we are seeing quarter by quarter sequentially? We are seeing an improvement in NPAs, but as a larger picture, how much of it is actually changing?
So in the first quarter, we usually expect that the MPAs to go up or to remain stable. Now that is because of the agriculture NPA. Agriculture sector, usually the NPA shoots up, and actually we have seen this in other PSU banks and some of the private sector banks as well, that the NPA is not that, it has not decreased that much as it was expected. But in the case of SBI, we have seen that the NPA has gone down. So this is quite a good sign, and the NPA has been reducing for SBI. If you see in the last 1 year, the NPS has quite come down, and also the slippages has also decreased. So these are quite good sign for the bank and shows that the asset quality is improving in the long term, and we can see that the earnings visibility is also becomes more clearer as the asset quality improve.
Right. So let's look at that slippage number that Akshay also mentioned. We are seeing that slippages ratio at 0.94% versus 0.41% on a sequential basis, whereas coming in at 7,872 crore rupees versus the 3,458. So that is interesting to note. That drastic drop that we are seeing, but let's look at it in the larger context. Let's now that we've seen a whole host of private banks also come out with their numbers, which have been pretty robust. So one could say the banking sector really giving that edge, because we are seeing good credit growth among all of them. So with the numbers here in SBI as well. So what are the kind of headwinds we could say that could face not just SBI being the biggest, but other PSU banks as a whole? What are the kind of headwinds they could face going ahead?
So a couple of things. First of all, the interest rate is something that is expected to be stabilizing, but we will have to look at it that how much of it gets stabilized, because we have seen that NIMs were increasing during the last few quarters, but in this quarter, both public and private banks saw moderation in their NIMs. And although management commentary says that the NIMS is expected to be stabilized, but we will have to wait and see that how much of the NIMS actually gets stabilized or what is the trend looks like. The second thing is the credit is surely shooting up, but there is also an increase in the corporate lending, which is seen across all the banks, be it PSU, be it private. So going ahead, we will have to see that the which bank is lending in their underwriting practices, something which needs to be looked at, and also the bank which will lend to the corporate more lending, that is something that needs to be monitored. And also there is one more thing, that the unsecured lending part, that is also something that will be monitored for the banks going forward.
I was just going to come to that part, because one thing that was flagged off, at least from the private banks, be it Kotak or others, was this unsecured loan, and how that one has increased a lot, especially when it comes to credit card spends, all of those really shooting up. Is that a reason for worry even for a PSU bank, even though most of their lending happens in the agri and bigger corporates? But is that a reason to worry, seeing these unsecured loans really rise?
So for now, we see that personal and credit card loans has been growing at around 30 to 40% year-on-year growth as per the RBI data. But now going as per the management commentary, there seems to be no worry regarding the unsecured lending, and banks have assured that the unsecured lending is done to the right customers who has guaranteed income coming in. So right now there is no sign of worry, but of course, if you see historically, unsecured lending has become a problem. So that is something that we need to be cautious about. But currently, there is no worry as such with regards to the unsecured lending, especially in the private pack, of course, and SBI, we would say.
Right. What about the loan growth figure? Is that on a sequential basis just marginal at 1.1? Is there a reason why that is not picking up, at least for a larger bank like SBI?
So for a loan growth, we tend to see more of a year-on-year number, and a year-on-year number of 15% seems to be quite decent, as there were expectations that the loan growth will be around 16%. So 15-16% growth is fine, and we believe that that was quite on the expected line as such. And also we believe that loans will pick up going forward. Q1 is generally, we see that the growth is around 1 or 2% quarter to quarter.
Right. Okay, Akshay, also give us a picture on other PSU banks. We've seen, quite a bit of in line in with expectation kind of numbers. If you have to say, if I have to just pull out a couple of them that we saw Bank of India, where we also saw the stock really reacting to that number. It was up about 3% in trade, where we there too the numbers recorded saw a threefold increase in the profit number coming at 1,501, 51 net interest also there increasing by 45%. So a lot of good numbers coming in even from the PSU packs. Are there any specific stocks that one should be watching, especially from the PSU banking space?
So our preference is in PSU is always SBI, because we believe that SBI is more rightly placed to take advantage of the tailwind that is being presented by the economy. We are seeing that the credit growth is growing at around 16% year on year, and also there has been improvement in the asset quality. The asset quality is the best quality that we have seen in the last 10 years. So given that this cycle is also like this is the best cycle that is going on for banks. So we expect to see that banks to do good. But going forward, we are positive on SBI from a long term perspective, and we believe that SBI will outperform other PSUs.
Right, and when you're talking about other PSUs, just to put it into perspective, we saw Punjab National Bank on 26th of July. They put out their numbers. They, reported profits about 307%. If I look at the other one, that is Canara Bank, that one had 74% uptake in its profit number. So that bottom line really looking very positive. Could you give us why is this really happening, and is this likely to sustain in the quarters going by?
Yeah, so the profitability has increased in this quarter and even in the last quarter because of the decline in provision as such. We are seeing that the provision had declined on a YOY basis, which is leading to the increase in profitability and the growth numbers that you said. And also on a YOY basis, it is in comparison to the last year. So last year's profitability were a little moderated. So that is why we are seeing that the profitability this time around is getting higher. But given the fact that from a long-term perspective, we are bullish on the SBI, and we believe that the profitability uh, might not be that lucrative as we are seeing that 300%, 400% growth. But yes, it will sustain at around maybe 60-70% YOY going forward in FY24.
Let's look at stock specific now. If I look at SBI alone, one would say, like you just mentioned, it is a player that you would want to look in the long run. But what are the kind of levels somebody should be looking out for when it comes to SBI? Especially if I look at 1 month, if I have to look at that chart, that one also down by about 1.78%. If I look at the YTD chart, that one also down about 5%. So what is this? What should be the timeline that one should be looking at this, and also the target that one could really keep?
So the levels for SBI, I believe, would be first of all the credit growth that it is seeing, and secondly the deposit growth. So SBI has been successful in mobilizing the deposit at a faster pace compared to other public sector and even private sector to some extent. So we believe that uh, these levels, and also the asset quality is seeing continuous improvement in the case of SBI. So I believe these things, and also the return on asset and the return on equity that the bank has displayed. So even in this quarter, we saw that return on asset is around 1.22%, while the return on equity is around 22%. Now 22% return on equity is something which is shown by private banks, but SBI is able to generate that return for its investors. So these are the reasons why we believe that SBI is a long term player, and it will outperform other PSUs in the long term.
Right. Can we also make a comparison between SBI or other PSUs, that whole pack? versus NBFCs and what we are seeing there, especially when we are looking at the broader picture. But like you can see on your screens, we are waiting for that commentary that we're going to hear from the SBI chairperson Dinesh Kumar Khara. Is going to be addressing the media shortly, and what they would want to tell us about their numbers. But Akshay, back to you, like I was trying to make a comparison. If we have to look at NBFCs and how they have performed, we saw Bajaj Finance really take it on the chin after its numbers, that too because of those retail and unsecured loans. But if you have to make a comparison as to where SBI is also now going into that whole digital space, and with their whole YONO, that one really picking up even in rural areas, is there a good competition there? Do you think that's healthy? And also, where do the NBFCs really stack up against a big player like SBI?
Yeah, of course. I believe that SBI is giving a tough competition to its, apart from the banking players, even to the NBFCs through its digital initiative, as well as the offline initiatives that they are taking. And talking about NBFCs, so NBFCs have created a niche for themselves in particular segment. Like for example, in unsecured lending, we have Bajaj Finance. In the vehicle finance, we have Shriram Finance, or in the rural lending, we have something like a L&D Finance. So NBFCs have created a niche for themselves in a particular market, in a particular geographies, while SBI, I believe, is omnipresent. I would say in the entire country. Their deposit, their sorry, branches are located everywhere, which is why we tend to make a comparison between NBFCs and SBI. But I believe that SBI is going to give quite a competition even to the NBFCs, as you pointed out.
Right. And what about making that comparison with HDFC, and now with that whole merger coming in, that is pretty much, almost pretty tough competition for SBI. So how is one supposed to be viewing SBI versus now what has come to be the behemoth of HDFC Bank?
Yeah, so HDFC, I believe, will take some time to bounce back, given that the focus has been on the merger and the merger proceeds. But HDFC they have been really focusing on increasing their branch reach. Now, this is something which is also seen in the banking space, that since the margins are being stabilizing, so the growth will come from the increase in branches and increase in employees. So I believe that HDFC, although yes, it is the biggest bank and the growth is seen, but I believe that there is room for everyone in the market. I believe SBI has its own set of customers in home loans and auto loans and gold loans, while HDFC will has its own customers, and now with the merger, it will also look to capitalize on its existing NBFC arm.
Right. And can you give us some perspective on the bank nifty? Now, we've seen that one, quite fluctuate, and one of the biggest components obviously being SBI as well as HDFC, and that counter though today, we've been in fact over the last month seeing it touch new highs, but as the market goes, that one has been that key position in really pushing or bringing the benchmarks also lower. So how is one supposed to be looking at the bank nifty as a whole?
So Bank Nifty, I believe, yes, it is down because of what is happening globally, and that being played out in the Indian indices as well. So Bank Nifty, I believe, will remain a little subdued. Maybe this maybe in the next 3 or 4 days. But I believe that in the long term, SBI, HDFC, ICICI, Axis being the main component of Bank Nifty, we are quite bullish on the index as well, and we believe that the index will give good return to its investors in the long term.
Right. Well, before we even go to the SBI chairman and listen to his commentary, let's also understand, in the macro scheme of things, we are next week anticipating what the RBI is going to be doing when it comes to interest rates. And if you have to look at a whole, that is really what drives these banking sector, the banking stocks for that matter, and that's going to see a tremendous amount of pressure. But given what we've seen, what the Fed has done and the other central banks across the globe, are we looking at RBI also likely to take a pause again, or are we going to see some kind of action come in there from Shaktikanta Das? What is your analysis, if you have one?
So looking at what the state expectation are and also what our view is, we believe that interest rate might stabilize this time around. Yes, the inflation has been under control, and we are seeing that the economy quite stabilizing. But we believe that a decline in rate is maybe 1 or 2 meet away, and we believe that this time around we might see that. Interest rate to be stabilizing.
Right. But a lot is really riding on that, and where we'll see whether the RBI also takes a leaf from what the other central banks are doing, or whether there is enough cushion and room with inflation really easing now, whether Shaktikanta Das has that liberties to play the growth card this time around. So we'll have to wait and see, but that RBI policy is going to be crucial. On August 10th is when we're going to hear from the governor. But for now, this is the SBI earnings that we've brought to you, pretty much in line, one would say, as to where the numbers have come. Really surprising on that profit figure. We're seeing 178% rise in profits there. The NIMS figure also coming in 24.5% higher, coming in at 38,904 versus the 31,195 that was recorded. So pretty much one would say good numbers. A street, though, not being too kind to the counter, one would say, down and about more than 2% in trade. So that one we really have to see how and why the street really not being too kind to the SBI stock. But we'll perhaps hear from Mr. Dinesh Khara himself on why, what the rationale behind these numbers are, and why they've seen such kind of good profit number, one would say. But NII perhaps little bit missing those estimates. So we are going to listen to him shortly. I think he's already taken the podium there. So we are going to get the rationale of where those numbers stand and what he sees, or what could be that figure that they are anticipating when it comes to loan growth, when it comes to deposit rates, all of that, and also the macro picture like we were just talking about. So that is something that we are going to have to listen and wait for what the SBI chairman Dinesh Khara says.
You can start. Good afternoon, ladies and gentlemen. On behalf of the State Bank of India, a warm welcome to the media representatives for joining this meeting. We are pleased to announce the State Bank of India's financial results for the Q1 financial year 23-24. I welcome Chairman SBI Group, respected Shri Dinesh Khara, Managing Director, respected Shri CFC, Shri Alok Chaudhary, Chief Influence Officer, Shri Chief Product, Managing Director Finance, Sarojini Narayan, other Deputy Managing Directors, respected officials to the press conference. We appreciate your presence at the conference today. We will now begin this media briefing. To the honors, I invite Chairman SBI Group, respected Shri Dinesh Khara, to address the media on the bank's financial performance for the Q1 of the financial year 23-24.
Thank you. Thank you very much, and welcome to the physical meeting for the media after a long time. Thank you very much for taking out time and to be with us. In July 23, of course, IMF revised the global forecast to 3% from 2.8%. This actually indicates improving prospects across both advanced and emerging economies. Immediate concern about the financial stability seems to be subsiding, owing to the resolution of the US debt ceiling standoff and strong action by the authorities to contain the turbulence in the US and Swiss banking. However, the recent downgrade of the US by Fitch over various concerns of the country's finance and debt burden could trigger the bouts of financial volatility with the risk of reactions from the market. Against this backdrop, I would say that Indian economy continues to exhibit stronger than expected growth momentum, with robust domestic investment providing the necessary support amidst weaker external sector dynamics. Looking ahead, real GDP growth is expected to be in the range of 6.5%, aided by the government's thrust on infrastructure spending, traction in domestic demand, revival in corporate investment, and healthy bank credit. Headwinds from prolonged geopolitical tensions and slowing external demand are the key risks to the outlook. On the banking front, credit growth has continued to grow in double digit and became broad-based across sectors. During Q1 of this financial year, all scheduled commercial banks' credit has grown by 16.2% and aggregate deposit has grown by around 12 to 13%. As demand for credit continues, we expect credit and deposit may grow up by 14 to 15% in financial year 24. In the backdrop of this economic environment, I would like to place before all of you the highlights of the bank's performance in Q1 of financial year 24. I am pleased to announce that for once again we have recorded the highest ever profit, and also this is something which is a matter of pride for us. It may not be out of place to mention that very often there is a tendency on the part of the analyst community to really evaluate the performance in terms of quarter on quarter. We have to be very mindful of the fact that the Q1 is always a unique quarter because of the two reasons. Invariably in the last quarter we have sufficient earnings. Various one-offs are there which are getting recorded, whereas in the first quarter those benefits are not available. Secondly, when it comes to asset quality as well, when we reckon the stress or NPA or SMA, they are at a point of time, whereas the fact of the matter is that at a point of time there could be a deterioration, but overall the recovery keeps on happening every day. For instance, in the current instance also, when we look at our SMA 1 and SMA 2, which is actually stress is somewhere around 7,000 odd crores. But if we look at it at the end of the month of July, we have already recovered 1,500 crores out of that. So I think to that extent, it is very material that we should actually evaluate YOY performance in the first quarter as compared to the first quarter of the previous financial year. So in that context, we have posted the highest ever quarterly profit of 16,884 crores. Net profit for this Q1 has increased by 178% YOY, with operating profit at 25,297. It has increased by 98.37% on a YOY basis. ROA of the bank for Q1 has improved by 74 basis points and it is at 1.22%. ROE has improved to 24.42%. Most other core profitability metrics have also improved sequentially as well as on a YOY basis. Net interest income for Q1 increased by 24.71% on the back of improvement in yields and continuing credit offtake. Domestic NIM stands at 3.47%, and it becomes all the more relevant in the context of our bank because our international book is just about 5 lakh crore, 5 trillion, and our total asset side is about 33 trillion. And also, when it comes to international book, we are very, very mindful in terms of the evolving global economy and the kind of stresses and strains which are evident in the global economy. So that's the very reason why our domestic book has grown almost at about 15% plus, whereas the international book has grown little lower, and that is a very, very conscious effort on our part. When it comes to operating expenses, they have increased by 23.68%. We have actually started building provision for the wage revision, and we have started building provision from the month of November onwards of the previous financial year, and that is the reason why it looks little on the higher side. But if you really look at it, the cost to income ratio, we are just about 50%. On the business front, the credit growth has been robust across all the segments. Domestic advances, as I was indicating, it has grown by 15%, comprising it's a very broad-based growth which we have witnessed. Retail advances have grown at 16% plus, and corporate segment grew almost at about 12% plus. SME and agri segment have posted handsome growth of 18% plus and 14% plus, almost 15%. Domestic deposits grew almost about 12%, driven by the growth in the current account and the term deposit. This is a general phenomena which we normally witness. When the inflation is on the high side, normally the money moves from the savings bank account to the term deposit, and the same behavior we have seen. And the current account growth is essentially attributed to the fact that we have started focusing on the non-government current accounts, and happy to share with all of you that even in the month of March as well as in the month of June and even in the month of July, we have been growing at a decent pace. It is much higher than any of the competitor also. So which very clearly means that going forward it will have an impact on the composition of CASA in the days to come. With regard to asset quality, our gross NPA ratio has come down by 115 basis points YOY, and it stands at 2.76% and continues to be at its lowest level in more than 10 years. Our net NPA ratio has also declined by 29 basis points and stands at 0.71%. Slippage ratio has improved by 44 basis points YOY and it stands at 0.94%. Consistently improving asset quality is also reflected in our credit cost, which stands at 32 basis points and has improved by 29 basis points YOY basis. We have a well provided stress book. PCR is showing an improvement by 23 basis points. It is at 74.82%. It actually went up by 127 basis points on a YOY basis and stands at, if at all we include OCA, it stands at 91.41%. On the restructuring front, our total exposure under COVID Resolution Plan 1 and 2 now stands at 22,000 crores, 22,666 crores, as at the end of Q1 of financial year 24. The restructuring book has actually behaved very well. Even if we reckon the SMA 1 and SMA 2 in the restructuring book, it stands at only at 11%, whereas if you recall, we have already kept a provision of 30% for this book, and going forward we are hoping that it will even behave even better. SMA 1 and SMA 2 does not necessarily become the NPA. This is nothing but a reflection of some kind of a stress on the cash flow for this kind of a book, but we have invariably seen that a significant portion of SMA 1 and SMA 2 gets recovered and it becomes a performing. The broad trend which I indicated, that out of 7,200 odd crores, 1,500 crore we have already recovered within a month of the account turning the stress account. So that's the kind of a situation. When it comes to the capital adequacy, the bank remains very well capitalized and we have sufficient headroom to take care of the normal business growth requirement. We have worked out that based upon the current capital adequacy, we are very well placed to support the further loan book growth to the extent of 7 trillion. Digital continues to be an important customer acquisition engine for the bank across the asset as well as the liability product. During the quarter, we have sourced 63% of savings bank account and 35% of retail asset accounts digitally through YONO. We have recently launched YONO for every Indian, in which customers of other bank can now access experience of seamless UPI journey on YONO. Our subsidiaries have consistently performed well and continue to create significant value for all the stakeholders and most importantly for the customers of the bank. Most of our subsidiaries are leaders in their respective segment, and we will continue to nurture these subsidiaries and see them creating value for their own shareholders as well as the shareholders of SBI. Before I conclude, I thank you all for your continued support to the bank. We consider it as a privilege to be able to contribute towards the growth of our economy. We remain committed to rewarding your trust in us with superior sustainable return over the long term. I wish everyone the very best. The floor is now open for all your questions. Thank you.
Louder. Seamless flow of the session, we will move from left to right, allowing everyone an equal chance to ask a question. You may raise your hand and ask a question using the name and the media house you are representing. We request you to please follow the format and restrict yourself to two questions focused on the bank's business. If time permits, we may request the circuit for additional questions. So now, Sakshan, yes.
Can somebody use the mic, please? I mean, you people can use the mic. Yeah.
Left to right, you said, na, Lalit?
He's left.
That's right.
He's left.
Who's left?
He's left.
You mentioned.
Daniel, please go ahead. I think you have seen, perhaps it has been a trend in the banking industry. All other banks have also witnessed, and as far as we are concerned, the drop in CASA for us is much lower as compared to what the competition has seen. Not as of now. Sorry? It is 3.47% domestic NIM. I hope so. Because if you look at yield loan advances and our cost of deposit, I think it should be stabilizing around this level. Sorry? I'm unable to hear you, please. Recoveries, we have affected recovery of about 1,200 odd crores, whereas last year around the same quarter, this was 500 crores more. And the reason behind is at that point of time we had some reasonably higher value of recoveries. Now the stock left out is not all that big in number, and that is the reason why what recoveries are being affected. It may not really look as high as we have seen in the previous years because the chunky numbers are not there now. Sorry? Credit card book. No, credit card is a separate entity. It is not in the main bank. But as far as the credit card is concerned, even there also they have made adequate provisions to take care of any potential delinquencies. So I think there is not much of a challenge there. In terms of, so long as the book is well protected, it takes care of the requirements of that industry. See, when it comes to asset quality, I would like to mention a couple of things. One is the underwriting, which I think we have strengthened our underwriting mechanism quite well. Second comes more so when it comes to retail. The very important component for retail is underwriting is very important. It should be essentially loan management system, which should be underwriting, which means that hardly any discussion on the ground, so that people should not deviate from the underwriting principles. The second component, which is very important for the retail in particular, is essentially in terms of the control and follow-up. And we have very robust control and follow-up mechanism, and that is the reason why I could immediately relate with you and say that out of 7,200 odd crores worth of slippages, we could pull back about 1,500 crore. So that is nothing but the effective machinery on ground to make the recoveries. So I think we are seeing very good results. So I would say that on these two counts we don't have any challenge. Now when it comes to when you look at slippages, in our case the slippages are not as much coming from the running accounts, and even for that matter, even stock of our stress portfolio has also come down significantly. Corporate does not have anything, SME does not have anything, retail does not have anything. Only slippage has come from SME and agri, and there also we could pull back a significant portion. So I think it's a function of the economy on ground, and I would say that the cash flow disruptions lead to some kind of a disruption in the repayment timing, But more or less, I would say that there is, in terms of quality, it's a much better quality, and in terms of the portfolio.
First thing, sir, I would like to ask about the credit growth guidance which you have given about 14 to 15%. You've already grown 13%. What gives you confidence?
Actually, 14 to 15%, I would say that though it is looking at 13.90, but for all purposes, it is actually 15% plus. Reason behind is that our international book, we will be very selective. We may not grow as we will be growing in the domestic market, for the simple reason that the international markets are very, very choppy, and we will be really growing in those markets if at all we can take care of the quality of the risk. Yeah,
So
please.
any sector specific, if you can give idea where you are seeing the growth, and also the distribution between corporate and retail.
I think more or less now, as the situation stands, we are somewhere around 60% as far as retail is concerned. So we will be evaluating the opportunities. If at all there are opportunities for growth in corporate, we'll be more than happy to support it. We don't have a constraint in terms of the funds. We have got enough funds available. Even today also we have got excess SLR to the extent of about 4 trillion. So if at all opportunities are there and it meets our risk appetite, we'll be more than happy to support.
One question regarding NIMs. That has been one of the points which has been raised by the analysts, although you have mentioned that one should not look on quarter. But what has been the reason behind the decline?
See, reason is, if at all, I would, last quarter of the previous year, we had about 850 odd crore worth of interest coming on the income tax refund. So these one-offs are the one which are normally seen in the last quarters. So in fact, in this quarter, we don't have any one-off. So I think if at all you are looking at the core business model of the bank, then there is no challenge, and we are at 3.47%, as I mentioned, on a YOY basis.
अनुराग from India. सर मेरा सवाल जिस तरह से अल्टरनेट चैनल में आपने बताया कि 63% ऑफ SBI अकाउंट जो है वो यूरोप के थ्रू आ रहे हैं, लेकिन अब दोनों को शुरू हुए करीब 6 साल से ज़्यादा का वक्त हो गया, और आपके ओवरऑल अकाउंट बेस में देखिए उसकी जो ग्रोथ है वो बाकी बैंक जो अभी 2 साल में जितनी ग्रोथ की उसकी आधी है। तो क्या इसके कॉशियस के अलावा
आप इसको जो है किस तरह से कहेंगे आधी है, ये बताइए।
नंबर ऑफ सब्सक्राइबर्स के बेस?
देखिए, ऐसा है कि हमारे सब्सक्राइबर 6.5 करोड़ हैं।
हाँ
10 करोड़ हमारे इंटरनेट बैंकिंग के कस्टमर हैं, रिटेल इंटरनेट बैंकिंग के कस्टमर। तो हम सिर्फ योनो ही नहीं ऑफर कर रहे हैं, हम उनको मल्टीपल चैनल्स ऑफर कर रहे हैं। अगर आप उसको इस तरह से नहीं देखेंगे, और जो टोटल कस्टमर बेस होगा तकरीबन अबाउट 45 करोड़ के करीब है, उसमें से जनधन अकाउंट आप निकाल दीजिए, वो तकरीबन 12-13 करोड़ के करीब वो है। तो उसमें से अगर आप देखेंगे कि आप अगर जो है 35 करोड़ की जो है रिमेनिंग पॉपुलेशन में से अगर 16-17 करोड़ आपने कर दिया, आप जो अगर बेस छोटा होगा उसके ऊपर कुछ भी चीज़ बड़ी दिखाई देगी। देखिए, तो मार्केट डायनामिक्स है, समय समय पर जो भी जो मार्केट की रिक्वायरमेंट्स रहती हैं, हम अकॉर्डिंगली जो हमारे को कमर्शियली भी सूट करता हो और जो हमारे कस्टमर का इंटरेस्ट को भी जो है टेक केयर करता हो, उस तरह से हम लोग अपनी स्ट्रैटेजी बनाते रहते हैं। सॉरी, आई एम अनेबल टू हियर यू। हाँ, no, last year we had first quarter of the previous year we had an MTM loss, which is not there this time. Other component,
I think that's a major one.
that's the major one. That's the major one which has made a difference. Recoveries, see, when it comes to, as I mentioned, that we don't have any high value or the chunky assets which are left out for resolution. They're all very small assets which are there, but our effort is to now really recover that also. So in terms of recovery, Biswas, can you?
Sir, we have a target of net NPA of
0.5%. So I'm not able to hear you.
Net NPA 0.5%.
Lalit Hindu from the Hindu. Sir, if I understood the question, answer rightly, the net profit has really gone up substantially, 178%. Is it due to one of the other income?
No, it is not because of, but also because of the lower NPAs also, lower provisioning, and also increase in the loan book and also yield on advances.
You have a sizable home loan portfolio. Recently, we have seen SBI Bank and SBI Card and SBI Bank is now providing you with home loan. If you can, how is the competition doing?
These are the realities of life. We have to face that competition, and we will see that we should stay ahead of the competition.
Shahid from Mint. Sir, what is the corporate lending pipeline like?
It is about 3.5 trillion is already there.
So that is for working capital and term together.
Yeah, it would be both.
And so which areas are you seeing this 12.4% growth coming from the corporate growth that you?
See, we have seen growth coming from partly from manufacturing, partly from road and construction, partly from airport, and also some bit of a growth which has come in from renewable energy is another very important focus area where there we have seen significant growth coming in.
Why you said that you have recovered 1,500 crore of that SMA 1 and 2. Are there any specific pockets of stress that you have seen?
See, majorly I would say that the recovery has happened in SME and also into SME and also retail, pure play retail, personal segment. And other than that, even we have recovered in agri. In fact, it is uniform. But the point is that stress is not there in corporate, large corporate and mid corporate. There is no stress.
Ritu from CNBC.
So while we appreciate this, you said not all SME 1 and 2 will become NPAs. The book has sort of doubled quarter on quarter. So if you could give us a sense of where this additional stress is from, and even in your slippages, besides agri and SME, are there any areas of concern? And if you could provide a number, for the full year, what is the kind of slippage are you expecting, or the credit cost that you're seeing?
I think our effort would be to keep the credit cost less than 0.50 for the fiscal. And when it comes to visibility of stress, see again that visibility of stress is a function of the real economy. If at all real economy is doing well, we hardly get to see any stress. If at all people are getting their salaries in time, we don't see any stress in the retail book also. Because if you will look at it, the composition of our retail book, our express credit is majorly into the those people who are earning salaries, and they are majorly state government, central government, public sector undertaking, or the defense forces. So long as they are getting their salaries, there is no stress. So SME, yes, of course. Some of the pockets wherever there are cash flow challenges, there is a tendency. But I would say that we have seen the trend that people normally try to repay that also. It may get delayed, but it gets paid off.
And so, in terms of your credit growth target for the year, this 3.5 trillion in pipeline, what will that entail in terms of overall credit growth? And
I have been maintaining 14 to 16% kind of a credit growth. I will stick to that number because we normally look at it in terms of the nominal growth of the economy, and we should be growing at a faster than the nominal growth of the economy.
any pockets you could outline where you're seeing?
We will be growing everywhere. We will be growing in retail, SME, and also into agri. And when it comes to corporate, we are open for all kind of opportunities. Maybe renewable, maybe services, maybe infrastructure like road, construction. So, but it should meet our risk appetite.
Abhijit from Business Times.
You spoke about 3.5 trillion of corporate lending pipeline. How much of that was approved in the first quarter?
Yeah, sure. I will just let you know. Just a second. Already sanctioned is No, already sanctioned and pending disbursement is 1.16 trillion.
How much was fresh was approved in the quarter one? That was my question.
वो तो number नहीं है. I
That kind
don't
of breakup will not be there. Actually, it is a cumulative number which keeps going.
Approximately 27 crores. Siddesh from Indian Express. How much
Sorry?
was it from SME and
Which one?
of the total slippages, sir?
Just one.
2200 is SME.
Agri was 2,300.
What's the outlook on SME and slippages for the year?
SME we have actually pulled back 24%. So I think we should not have much of a challenge. It will not eventually not show up in the NPS. Only thing is SMA 0, 1, 2 is something we have to keep on following up. Efforts on ground goes up.
So sorry to interrupt, sir, on the coming to the CASA, you said that is inflation and then the interest rate cycle. That was filtered. Now the signals are more into the stability zone. So would that also reflect in your CASA or that will continue to?
No, actually, our effort would be to improve the CASA with the current account component. Because when it comes to savings bank, these are the kind of product variants which are there. People normally sweep their balances. So that is something which is going to be a reality. As the economy develops, this is the kind of a tendency which will be seen. So our effort is to build up CASA through the current account route now.
Current 42 or level, that should suffice.
Sorry?
42 current level that you have.
I think we should rather try to improve it.
Joel from Economic Times. Sir, your provisions have dropped year on year. And
Sorry?
your provisions have dropped year on year.
If at all we don't have NPA, you should be rather happy. If at all we don't have NPA, we don't have to provide. And the other piece is, the aging provisions are not there because we have already taken care of all.
Yes, sir. My question is actually that excluding AUCA, your provisions have also fallen. I was expecting that you would.
Because
yeah.
why should I provide?
Yeah.
You tell me, if my assets are performing, why should I provide?
Sure.
After all, I have to be accountable to my shareholders.
Correct. So, is there any write back that you have done? That was my question.
No.
In this quarter or
Any write back?
other
No.
cyclical
Sir,
write
I
back?
will just explain it to him. See, when you have a fresh NPA, you have to provide less,
Less.
right? So, as sir mentioned rightly, we didn't have much of aging provision for this quarter. So, since the fresh NPA you have to provide less, in actual reality, it appears that we have provided less. But you have to also remember one thing, that when we recover from a loss account, we have to reverse 100% of the provision that we have already made. So if you add the dynamics, it will come to a number which has been displayed in the balance sheet.
And also in the last quarter, we made some specific provisions for some specific accounts.
Which
This
was
time we
March
have
one. Yeah.
previous quarter. And also some RBI.
See, I think if you see the trend, sir, if you permit,
Please.
industry-wise, as the legacy books get provided fully, you will see less and less PCR. The PCRs will keep coming down overall. I mean, because AUCA has reached 100%, for example, right? So I think it's a general trend.
The second question is that I'm seeing a trend where quarter on quarter, if you see the slippages are increasing. If you see versus December, March, now June. Is there something that is shifting? You mentioned that SME agree with where the fresh slippages are coming. Are you seeing any stress building up on except corporate, except retail, where because of which the slippages are the supply of?
No, I mentioned, when it comes to what happens is that the trend which you have mentioned, the trend, this looks to be on the little higher side because I think we have got that trend also in this presentation. And if we look at that trend, this is actually, it looks little on the higher side. But the fact of the matter, if we compare with the previous quarter, yes, it is on the higher side. But if we compare a comparable quarter of the previous year, then it is on the lower side. It was actually much higher. From there, it has come down to, if at all I'm not mistaken, it was somewhere around 9,700 odd crore in the first quarter of the previous year. From there, it has come down to about 7,600 crores. So, as I mentioned, that whatever recoveries we are affecting in the month of July, it will actually get reflected in the September quarter. So to that extent, the subsequent quarters will have the impact of the recoveries of the previous quarter. Whereas in the first quarter, we don't have any such thing, because whatever recoveries were affected, they were all accounted for as on 31st of March of the previous year. That is the difference.
So, but if you see slide 39,
Okay.
so in that slide it's a complete gradient starting from the Q1 to Q4.
Okay.
So in Q1 it was already higher. So Q1 that and Q1 this, the gradient is still maintains. And further gradient we expect in Q2, Q3, Q4.
So actually now, if you really look at it, from that level 9,000 odd, it has come to 7,000. So now the base becomes 7,000 odd crores as compared to 9,000 previous year. So it will actually, our total balance sheet size will go up, and this will further come down.
Thank you so much. Siddhi from Reuters.
Hi sir, I wanted to ask you about the pricing on your corporate loan. Some banks have told us that there is an issue in terms of pricing. So wanted to get your sense. Do you think
What is the issue? Can you please explain me?
that larger banks are underwriting these top level AAA rated loans at a much cheaper rate? Spreads between AAA and AA are falling.
I think even I hold the same view.
So is there a pricing issue?
No, if at all I would be going by what they are doing, then my NIM would not be at 3.47. And I'm very mindful that I must protect the NIM for the benefit of all the stakeholders.
So my next question was on the NIMs. Now that as deposits get repriced, any target on the NIMs?
No, it's dynamic.
NIM is always dynamic because yield on advances will keep on changing, and similarly cost of deposit will also keep on changing, cost of resources will keep on changing. But yes, of course, we are very mindful that we should try to have a decent NIM, which also means that we should not unnecessarily overprice our borrowers and we should not underpay our depositors.
The last question is, have you estimated how much of these ECL provisions would be required?
In fact, we had done some exercise and it is hardly anything. If at all I may say so, I think we had some last...
5,000 per-
Huh?
5,000 per
That
year.
figure is not there in public.
No, that is something. That number is negligible. If I'll put it like
It's not
this.
going to impact our balance sheet.
For us, it is not going to be of any material
Do
impact.
you want
Usually we allow
non-NPA
the NIM.
provisions to
Yeah,
be
yeah, please.
So in case of name, I think there are a lot of questions of name. We ought to understand the equation of name. So there are at least three variable parts in this, and all of these, except for the fact that you can increase your denominator, the other two parts are entirely a function of how the interest rate cycle moves, as well as how the customer behaves in terms of managing its finances. So if you can see the last year and within a couple of years, the AUM mutual fund itself has gone to more than 9 lakh crores, vis-a-vis what it was. So the customers, as and when the customers' maturity level in terms of financial literacy and management increases, there will always be a high level of dynamism in their allocation of funds. So if the interest rate cycle it has moved up, there will be some time when it will stabilize and come down. So as per the cycle, the NIM also has a tendency to be sensitive. As far as the bank's costs are concerned, the quantity which we want to reach for lending as well as the price which we are ready to pay, this leads to our cost of deposits. So that is why if you see some of the components interest rates of ours, whether it was savings bank or whether it was some of the buckets in the lower bucket and the bucket more than 3 years, we have made some tweaking entirely depending upon the need to balance our ALM as well as the necessity of funding. So these things are dynamic, and hence the say some kind of prediction about this particular need has a lot of other variables which we all will have to be cognizant of.
And also, as I mentioned in the last quarter of the previous year, we had one-off like the interest income on the income tax refund. So those one-offs also keep on coming, but it normally comes towards the end of the financial year only.
Piyush from Financial Express. Sir, good afternoon. A couple of queries. Firstly, on branches, is there a branch expansion target for this year, or will we be relying for BCs expanding that network?
See, we already have got 22,000 300 plus branches, and we are having BCs. In fact, we are embarking upon a multiple distribution strategy. It is not merely confining to branches, digital, BCs, and also wherever required, there is a need for branches. We are opening those branches also. We have a plan for opening about 200 plus branches, about 300 odd branches. But yes, of course, depending upon the potential which is available, we will be opening those branches.
Sir, on the digital side, you are acquiring a lot of savings bank customers through YONO. On the asset side, it's like 30-35% odd percentage. So, are we looking to invest more in digital to acquire more customers on the asset side as well? Is there any targets for digital?
Actually, we are investing into analytics for acquiring more customers on the asset side through the digital mechanism. So that is something we have already started seeing the good result of that. Last year, in the first quarter, we had underwritten about 20,000 odd crores through the digital. This year, it is about 29,000 crore we have already underwritten. So that is the kind of a growth we are seeing on a quarter-on-quarter basis, year-on-year basis.
Just one query on Yes Bank. Is there any strategy?
We have not yet deliberated it in the board of the bank.
Okay, and you've made 1,500 some odd provision for employee wage revision. Will that continue in Q2 as well?
Yes. See, that is because this agreement has fallen due in the month of November. So from November onwards, we are making this provision of about 500 crore a month. So till such time the negotiation gets finalized and we pay off, we'll have to provide for it.
Thank you. Vishwanath from BQ Prime.
Hi sir. Sorry, I'm coming back to the asset quality question. I know you're a little annoyed because everybody asked this. But
No problem. No reason to be annoyed. I have to answer to all your questions.
SBI question I just want to ask you. So, yes, you're saying that you're recovering that money in a couple of months. These are SMA1 accounts, which means that they're...
SMA1, SMA2 also.
No, but SMA1 is the higher big chunk, which means that these loans are in default for at least 60 days. I'm just... How are we saying that...
Actually, it is at times it is SMA0 and SMA2. SMA1 is rather low.
How can we say the corporate loan book is holding strong on asset quality when loans are in default? Yes, sure, they're paying you.
No, we are not having the corporate book in this, no?
Well,
That is how we are saying.
Loans above 5 crore itself.
No, we are not having that. That would be SME. So we are not having corporate book.
So
That's what we are
5,000
saying.
crore roughly SMA1 is coming purely from SMEs.
SME, agri, retail, everything put together.
No, but now, let me ask the other question on the corporate loan book side, sir. You said that renewable is a strong...
I would rather correct 131 crore is a slippage in the CCG. That's all. Yeah.
Corporate.
Mid corporate, 131 crore. Yeah.
On the corporate loan...
And actually that also I know what it was. It was only a technical error which got rectified the very next day. Anyway, it doesn't matter. Since it is there on record, I will have to explain.
So you will say that the asset quality is holding strong as far
Yes.
as the corporate borrowers are
Yeah.
concerned. On the loan book side, you said renewable energy is one of your sectors that is seeing a high demand scenario. Power still, however, keeps going down every quarter. There's the outstanding loan amount. Is it because you're writing off your or removing your legacy book, or
Because whatever stress was there in the power sector and whatever was there in the stress assets group in the power sector, we are getting the resolution of those accounts.
how much would renewable be as part of your overall?
Renewable is not there as of now.
Okay. Not big enough. Fair.
Amsini from Indo Business Weekly.
Hi. Sir, I'd like to understand a little about your foreign book. We see that the NIM for overseas book has gone up very significantly. Comparatively, even the costs have gone up quite significantly. What used to be at 1.3% as cost of deposits has gone up to about 3.5%. So if you can explain what is helping the weight on the international business.
See, actually, when it comes to international book, we run it more like a corporate bank. So, normally we try to match the terms of the loan as well as of the liabilities also. And they're all market linked. So, the way we are seeing the Fed rate going up, same is reflected here.
And what is the plan with respect to geo payments? Because I think you brought down your stake to 30 or something now. would you continue to remain an investor there post the reorganization that's happened?
I think it is a bit premature to really comment on this question. It is under deliberation at various levels.
Thank you, sir.
Manojit from Business Standard.
Hello, sir. Cost to income ratio has come down significantly from 61% same period last year to 51%. Is there any further scope to reduce the cost to income ratio?
Our effort and endeavor is to bring it down below 50, but we'll have to see that how best we can achieve it.
And on the deposit side, what kind of deposit growth you expect? You said 14 to 16% is the loan growth. And linked to that is that, have you seen assets mostly repriced and deposit repricing yet to happen? Or?
No, I think it has both have got repriced now because normally depends upon the composition of the deposit. So I would say that both have got more or less repriced.
Okay, and what kind of deposit growth target you have for this current year?
We have grown at 12%. We'll try to inch it up further, maybe to the extent of about 13-14%.
One last thing, any update on SBI?
But we will be very mindful in terms of the cost at which we grow. I'm very clear on this because I don't want to. I'm still having SLR, excess SLR to the tune of 4 trillion. 4 trillion. So I'm under no compulsion to really pay up high to mobilize the deposit. But I'll be very reasonable for my customers.
This was evident during the 81 bond raise also. The consciousness on cost.
We are very much for anything which we raise. Cost is something which is the most important factor for us.
And sir, SBI mutual fund IPO, is it on the hold?
It is off the focus.
Off the focus. Thank you.
New phrase now.
ना बोलना पड़ेगा कुछ.
Sir, your aviation book has grown by 30% year on year. So wanted to understand, considering there are some airlines going to insolvency and stress as well.
The aviation book where we have grown is the one where everybody has got the confidence. Don't worry about that.
So how do you see that also? How do you see your lending to the sector in this financial?
We are very choosy and selective. As I mentioned, that all those entities which meet our risk appetite, we are happy to support them.
Thank you.
Mayur from Times of India.
Sir, can you give an update of the local agreements? How many of them have been? How many of the local agreements you have updated to?
More than 50% have been updated.
So can this not be done digitally because there are a lot of
No, that will be.
That even that work is on.
Preeti from Bloomberg.
Hi, sir. I wanted to check, a lot of your peers in the private sector are talking about attrition at their banks. Wanted to check, how your attrition number.
Just one sec. I have taken that number. I expected this question to come. Because now it's more like a question answer session viva for me. It is more. I have already placed my written exam before the board, and there's viva for me. Our attrition is just about around 3%. Last year it was just about 3%.
This is including natural attrition.
Actually, normal retirement, retirement under BRS, death in service, resignation. I'll just give you a number, I think, where you would be more interested is the resignation. That is all put together are just 514. And we have got a employee base of about 2,25,000 in the current year. In a full year, resignation is somewhere in the range of 2,000. Sorry?
Termination by the bank.
Hardly.
Would that be? And sir, I'm sorry I'm asking a question out of turn, but recently the bank, the chairman's salary of the bank was in news, was in press. It was being compared to private banks as well. It's great that you have a very low attrition, but internally are you working towards this? I know there is another layer as well involved, but are you taking it at any channel? You're talking to your stakeholders and government about
See,
this?
last year we paid PLI to the extent of 10%, and we are also permitted to have 1% of our profit as a incentive which is based on the performance. So even that was also done. So I think these schemes we have been evolving over a period of time, and we are paying off.
And the salary structure is market oriented.
And also salary structure is also market oriented, because when the public sector as a group are negotiating, then we take care that to the extent they are being addressed in the IBA, beyond that we take care of ourselves also. These 4-5 people are not material.
So I have one more question. Mr. Khanna, I have one more question. This is, you're putting a lot more of your energy in digital and technology. So I wanted to check, how much does technology investment account for as a percentage of your revenue?
Sorry, technology?
Investments in technology.
See, can I think it's difficult to define in percentage terms. Our capital expenditure is need based, right? And operational expenditure is the large part of the IT expense.
If at all I may put it the other way around, if at all there's a need for digital and technology upgradation,
there's no bar.
Resources are not challenge.
Yeah.
The only thing which I insist for is my return on investment, my payback time period.
I was just trying to check if it's increased as part of your...
Oh yes, it is increasing. It is increasing. The way we are going strong on the digital, it's a very clear reflection that we are investing.
And it will further increase.
It will continue to increase.
But you won't give us a percentage.
Sorry?
You won't give us a percentage.
See, that's what I'm saying. That percentage is not a constraint. It's a need base.
Last two questions. Shivra from
Good afternoon, sir. Sir, I just wanted to understand what is the reason behind the quarterly fall in your domestic NIMs? That's my first question. And my second question is, what is your outlook on cost of deposits?
See, as I mentioned that last quarter of the previous financial year, we had some one-off which was like 840 crore, which came as a interest on the income tax refund. So likewise, there were some such one-offs were there, but in this quarter there is nothing like that. So actually, once again, I will repeat what I said right in the beginning, that I think when it comes to NIM and these kind of ratios, in the first quarter we should always compare on a YOY basis, because in the last quarter of the previous year there would be many accumulation of the year which would have got realized before the close of the financial year. In the first quarter there is nothing like that. So that's why it should not be compared. What was the second question?
Your outlook on the cost of deposits?
Well, cost of deposit, I would say that it is a function of the inflation, and as the inflation stands now, and also we expect that hopefully RBI policy will remain at the same level as policy rates are concerned. So I think more or less it should stabilize.
Last question from the time.
Hi sir, Kabir from Informist. Just one question about your PP ratios. Do you still feel that it is a little undervalued compared to...
I do agree with you. Do something.
You're one of the best performing stocks in the last 6 months going
Dil mange more. Sir, it is for them to decide. I am not the one to comment. Sorry? I am, and I will continue to.
Thank you all.
Any other questions? Thank you.